Trading fickle markets is exactly what we're going to be dealing with between now and the Wednesday 2 p.m. FOMC decision, very likely to pause rates, but it remains unseen what they will do in November and December. Big cloud of uncertainty over the market. Then we have the end of quarter. Q4 is by far the most important quarter for anyone managing money because that's the quarter, well, that's recency bias, right? That's the quarter they're going to be graded by the most. That's the ending quarter. That's that ending result. And if there is going to be an interesting result to Q4 as we go from Q3 to Q4, what stocks are going to benefit from bottom picking? That bargain hunting that's very much part of the roll from one quarter to the next. So we're in very uncertain times. We're going to continue to deal with this fickle market. I'm Raghee Horner. I'm the lead trader over at the Sector Secrets Mastery, as well as the Simpler Futures Room. And we're going to talk about how I measure fickle markets. In fact, is there a fickle indicator? Is there a way to understand the sort of the fickle nature of the environment we have right now? Yeah, absolutely. Take a look. This is a downtrend going into a bearish chop, then going into a bullish chop, and then finally going into really a more of an uptrend, right? And that's all in one session. This takes us basically from the 9:30 open to the 4 p.m. close. This is normal. This is not unusual. In fact, let's start with the first thing we can do. Pick your window, right? Choose your window. There's two windows we can focus on during the Wall Street hours. There's the AM window. There is the PM window. So if you get the window right, you also then know which part of the day you're trading. So the AM window for me is typically 9:30 to 10:35, maybe 10:55, and rarely anymore 11:30. But it's really that first hour to 2 hours in the morning. I like day trading the first 65 minutes of the morning. That is still currently yielding about 2 to 4 trades per morning. So we're not lacking a full pipeline of opportunity. That's the AM session. All right, so that means find something else to do in the middle of the day. This is where you're going to make decisions that are likely going to cost you money. Volatility contracts, volume contracts. You have the London fix. There's a lot going on during sort of the midday doldrums in the U.S. But at 1:35 p.m., you'll notice volume starts to pick up. Volatility starts to pick up. We end up with a really nice window from 1:35 to 3 p.m. I would call that the PM session, right? This is the PM session. Notice I'm not saying 4 o'clock. I don't actually like the last hour of the day. If I look at where some of the best moves are going to be made, they're going to be made as traders are coming out of lunch. And then to me, that 1:35 window is a good one. So I can start to look at, what's going to happen basically 1:35 to 3. Pretty decent movement here, 1:35 to 3. And that's really what I want to focus on if I'm going to come back for the PM session. So the next question is, well, Rog, when would we come back for a PM session? When does it make sense to come back in the afternoon? And I'll tell you, it's not often that it makes a lot of sense. Let me show you a index. This is going from the NASDAQ to the Russell. This could be QQQ to IWM if you want to look at it from that perspective. And here we have the 5-minute chart of the Russell. And we had a bearish breach, which is to say the clearing range breached to the downside, the high to low range of the first 30 minutes of the morning, breach to the downside. So that typically gives us expectation for more follow through. But that's not the only thing that it did. It breached not only the clearing range, it actually breached the initial balance as well. Those are two things that we can automate the monitoring of. So notice again, not just the clearing range breach, but followed by the initial balance breach. And that is where, if I'm going to say there's a better chance for follow through, that's what we want to do. And the follow through takes us from the AM session, right? Here's my midday doldrums. So my midday doldrums to my PM session. It's really this odd little middle here that we don't want to make a lot of decisions about in terms of entry, but there's a higher chance of follow through during this midday doldrum period if we have both the clearing range breach followed by the initial balance breach. Okay, the next thing then is, well, what are we getting at 1:35? Look at this shift, right? We are no longer in a downtrend. At 1:35 p.m. Eastern, we've gone neutral. Completely different environment. Remember, split the trading day up, right? Split that trading day up. It's going to help you a lot. And these tools are a staple in the Sector Secrets Mastery and in the Futures Room. Most importantly, I'm going to point out two tools that are going to help anyone out there. So let's say you're using any one of the amazing tools here at Simpler. Maybe it's the Squeeze, right? Really popular tool here at Simpler. It could be the Squeeze, it could be the Squeeze Pro. Squeeze is going to work best in a yellow environment, especially when we have a little bit of consolidation, looking for sideways yellow markets. What about the Ready Aim Fire? I use a slow stochastic, but a lot of folks use a Ready Aim Fire. Fantastic, right? Once again, that yellow environment is going to have far higher probabilities for both of these indicators, right? And then you might say, but Rog, what about an indicator for all seasons, right? I like my HPMRs. A lot of folks have been asking me, Rog, well, what else can the HPMR work with? You know, what I have your HPMRs, but you know, I really like a lot of the things that John's doing right now as well. I do too. So let me show you what else you can do. This is that same chart of the Russell that I just showed you with the HPMRs here. Notice how we get close to the HPMRs, and this is John's trend rotation tool overlaid with my multi-trends, right? So when you have the multi-trend, when you have the grab candles and you have the HPMRs, you'll notice a lot of things are going to work at the same time. What about, well, actually, let's look at another stock or symbol that we haven't looked at. What about the S&P, right? Anytime that I can get close to levels that, for example, are going to allow me to set up a move to the up or down side within the context of a trend, and I have a tool that might point out where the acceleration to the downside might occur, whether it's ES, whether it's SPX. You know, again, you can add these tools to a basic understanding of where volatility-based support and resistance are going to be, like this. This is now the SPX, gang. We can take a look at the SPX in the same way. If we're going to start moving back up, right? If we're going to start moving back up, start looking for proximity to the green. There you go. There's another one in the afternoon. Here's another one. You can look for the directional bias from one tool and say, hey, where are the support levels as we're moving higher? So just a couple things to put out there. All right. A couple ideas that a lot of traders have been asking me about. How do you put some of these tools together? How do I use the multi and other things that I might have? How do I use, again, Squeeze? These are all things, yellow environment, blue grab candles. There's a lot of things we can do in environments like this. Okay, gang, hope that helps. Keep it short term. I'm here to help you with whatever it is you're looking to get out of the market, with whatever tools you might be using. But I will tell you, add the multi-trend and add the hourly price movement range to everything you're doing, because it's just going to make it better. It's like salt. It's going to add a lot of flavor. All right. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.